I don't know if this is showing yet on the live stream. Oh, there it is. Good morning, everybody. This is Jack Gleason with Startuptrading.com. It's 9 o'clock in the morning, New York time, July 7th, 2020. Last evening, we had the Australian cash state and RBA rate statement. Nothing really important overnight other than that. We just have a bunch of yellow star events, French trade balance, German industrial production. And then this morning, we're going to have the Canadian PMI numbers and then Jolt's job openings at 10 a.m., as well as economic optimism. Later in the afternoon, FOMC member Quarles will be speaking. And then this evening, the Japanese yen has the bank lending and current account. Tomorrow and in the overnight session, we're going to have economic forecasts. It's tentative, don't have the time yet. And the unemployment rate for the CHF, and then crude oil inventories tomorrow morning. We'll go over the rest when it comes. So that's really it. Pretty light on news. I'm going to start off with gold here. Title of the video is Will Gold Roll Over? I believe I made the title or something along those lines. And I want to show you what gold has to do in order to avoid rolling over here. Now, we can draw this trend line from Friday, June 26th low to the low of last Thursday, just for a little bit of a visual reference of what this trend looks like. Now, we came into yesterday the 50% retracement long. Now, that was in the overnight session of the Sunday, Monday. The upside target was 1797. Now we have that same low, which is last Thursday, too high, holding us up here, and that means we are bullish above 1778.8. Now if we do break below 1778.8, I am expecting a pullback, a little bit of a deeper pullback into around the 1757 level, but everything above the 1778.8 level here for GC is bullish and has an upside target of 1806.7. And it's an upside target of 1806.7. So we would confirm that upside target by breaking above the opposing short, 1792.3. But right now we have reacted off the 82.7 long support level, and the upside target is 1806.7. Moving on to silver. Silver has this extension. Now, I'm going to just show you guys this hourly chart. The higher time frame support that I have is like an 1812. We came off those levels Wednesday, Thursday, rallied up. We're back at the bottom of the range here. And I believe, let me see here, the lows of Thursday to high have technically pierced. So that makes the long setup in silver a little sloppy. At this point in time, I would like to see silver trade back above 1857. So I'd like to see us get back above this level and then look for a pullback. Now, the predominant trend for me is still higher. And I'm going to show you guys like a 4-hour chart. You can see that we've just been kind of trending up here, right? We actually ran into a trend line on today's low. But because we're predominantly trending higher, I'm not interested in selling any short setups in silver. Instead, I'm interested in mapping out what would be a break of a short and then a long. So if I'm looking first for shorts to break, and then once shorts break, I begin looking for long sequences. The VIX still inside this extension. We're bearish below the VIX 3015. If we break 3015 in the VIX, things can get interesting. But that, if you guys remember in the trade room yesterday, that 29.75 was our resistance level. That traded on close. I made a video on this for the masterclass students on the arbitrage between the VIX and the ES. We had the resistance level in the VIX trade yesterday. And for those of you guys who aren't in the masterclass, you can go back and look at this anyway. But on a 5-minute chart, exactly when we made our highs in the VIX, and we ran into this resistance level that was predetermined yesterday in the morning trade plan, we hit it, and that's when the ES began its rally and close on the point. So one of the setups we were looking for yesterday in the S&P 500 was the full 50% retracement from the Friday's low. Now, we continued through into new highs without ever trading that setup. There was a different variation of an extension that had traded. Now, what did we do here in the overnight session? That's basically our low. This green box was, I'm just going to bring it over a day so you can see how accurately it traded, was the laser setup for the S&P yesterday. And it was a great reaction here in the overnight session. Now, there is bearish price action since 9 o'clock yesterday. And what's going to be important to note is there is an extension short here from, I think it's a 31.80 quarter to low. We traded off a 38% retracement once, and then this was the same anchor new low. I'm cautiously bullish below the 31.66. The support level of the halfway back long is 31.44, but our highs here, and if we do get a check lower, this is what I'd love to see. Our highs to the tick in the overnight session are an extension target of the long. They're an extension target of the long. So this same anchor new high is a potential variation of a long setup. And I really just like the way the 50% retracement lines up with that Friday low. So that would bring us down. There's two levels. One of them is decently below us, and that's at 31.12. I'm going to pay attention at 31.12 for the rest of the week. Unless we make a new high, it'll be adjusted. 31.12 is below. But right now, if we hold above the 31.35, we can continue to rally. But if we get a reaction in between 31.58 to 31.62, the S&P can head back to the bottom of the range. This 31.44 is definitely going to be a battle zone if we can stay above or below it. If we get below it, the level's below. If we get above it, we need to still clear these resistance levels higher. Moving on to the Dow, similar setup. Friday's low to high. We came into those levels in the overnight session. This is kind of, and I'm not going to draw this green box here because the trade's kind of over, but if we can stay above these levels, we're going to continue to upside profit targets. But if we can't, we need to know where we could fall possibly back into. And one of the levels I would just mark up the gap fill from, so we have the previous lows here on Thursday. There's like a gap, even though the market wasn't open. It's the Sunday night open, and it's the 38% retracement, and it's a trend line retest. This support level, 25,658 to 25,628, call it, and about 30 points wide. But there is that same overnight extension short sequence that exists in the S&P. It's really tight, but we've reacted from that, and that has downside profit targets. So I'm gonna be interested in watching to see what happens really here in the first 30 minutes of the open, whether or not we're getting above or below these overnight support levels, which are the halfway backs and the Friday lows. The Nasdaq is going to be, and it really has been, the most telling market. Now, we had an extension yesterday, a couple of extensions. The Nasdaq, you just take every long setup, okay? The Nasdaq is absolutely in a situation where you just take every long setup. You look for a free trade. We had an extension to target our highs, overnight highs, that profit target, and the same anchor new high. We've traded, free traded, and that's the current setup for the hourly time frame. Now, on the daily time frame, there is this extension from what is the June 23rd high and an extension from the June 10th high. Now, I am looking at this whole zone, this green box. Now, this green box is the 38% retracement of the extension from June 10th. It's the 50% retracement of the extension of June 23rd, and it's the consolidation period yesterday before we broke out. Okay, if we somehow start getting below that, I think we could have a regime change, but that is the zone I'm watching here today for the NQ. This is already traded, so everything would be a second test if you're not already in that trade. This 105.43. Oil, interesting. So oil's in this channel here, but you could even draw a more aggressive trend line that kind of broke yesterday. Now, after that trend line break from what is the top of the range, the highs of the prior day are 41.08. So, you can go back. This is a hourly leg start. We failed directly from the hourly leg start. And, we broke a little bit of a trend line. Obviously, some selling pressure here in the overnight session. And we've run into a 50% retracement short at 40.49. Now, 40.49 has been front run by 1 pip. Its downside target is 39.62. I don't have any support into what would be the full 50% retracement from the lows of June 25th, and that is a 39.08. And that 39.08 would be the negative 61 of the short. And if it traded today, there'd be a trend line down there as well. So we'll see if we break back above the short. I mean, this has been really, really choppy here. There was this extension from 38.07 to high. It traded once to target. You could argue it traded twice to target, or it never completed targets. So that overnight low is at 38% retracement. So there is the possibility of us completing the short target and running into that 39.58 below. But I am expecting to move down here off this short to the 39.58 level in CL. USD JPY, let me go to show you guys this hourly chart. We've been in this 50% retracement short Wednesday, front run. Sunday night, trades, and then once again Tuesday here, we trade. So it's a little bit of a, you call it like an expanding wedge, right? An expanding wedge inside of 50% retracement short. I'm still liking the 107.11 long, or just in this general area. We have run to what is the top side. We failed from this level Thursday. We failed from this level Sunday night. And once again, failed from it at 5 o'clock this morning on Tuesday. I would expect us to, this is a range. There's not a short that holds in this range. There's not a long that holds in this range. There's not a short that holds in this range. There's not a long that holds in this range. So we're at the top of the range, and we've never held any support or resistance level in the middle of the range. What can we expect? Bottom of the range. So bottom of the range is what I'm looking for from this point. And that is a 107.13. If we do clear up to 107.95s, we'll, look at the market and its price action when and if that does happen. Aussie dollar. Now, the Aussie dollar had it had that Red Star News event. It was the RBA rate statement. So we had a traditional last week on Wednesday that completed targets. And then we had our next traditional that completed profit targets. And then technically we had our next traditional, which broke. Came all the way to the 78. So I'm a little weary of even, I just think we could, if we get back up to like this zone here, this is all resistance and this is support. So like 69.70, just like where we broke down from, resistance, and then the full 50% retracement long, which is untested, I'd like to see trade. And that is a 69.14. It's the swing low of last Tuesday to high. The euro, yesterday we had an extension series. It was once to target, same angle new high, traded, and then we consolidated for so long. By the time we traded the 50, there was a lot of buyers above, and it was just a total rip stop out. We ended up running into the full 50% retracement long at the 112.56, front run by 2 pips, and there's been incredible reaction here. This is a great reaction. We have also, I'm going to show you guys this 4-hour chart. We have broken out of this wedge that I have, and it's a breakout of the top line of the wedge, retest into the halfway back, and a reaction. So the euro, and I'm going to go down to a 5-minute chart, is very technical coming out of these lows. We had a 50% retracement that is now through, and we're into an extension. So that's the micro series, and I'll let you guys, I don't really like to draw micro series in my morning trade plans because they change so frequently. So I'll let you guys have at that. Those of you guys who understand my Fibonacci sequences and have taken my masterclass, the euro is definitely one to watch here on the micro time frame here today, because it's come off of this higher time frame support level, breakout wedge retest, 50% retracement long, and a reaction. Moving on to the pound. So it's a close one. I was looking at this 50% retracement long in the overnight session because it was front run and then we retested it. We did complete it. The only thing, honestly, I look at right now is the halfway back long for the week. Tuesday's low to high. It's a halfway back long for the week. It's a 2,500 even. So see if we can get it. Maybe it'll be in the overnight. Maybe it'll be during the day. That's what I'm watching for. And then the USD CAD. I like the 135.15 support. Let me actually see what this. The full 50% retracement short from the highs of last week is a 136.16. That would be resistance, but kind of mid-range here. So I don't really like anything unless it's one of those two levels. They're about 100 pips apart. And that is going to wrap it up here for my morning trade plan. If you enjoyed this content, please give this video a thumbs up. If you're interested in learning more about trading, check out the links below. I do think we have some pretty good action ahead of us here today. Decent overnight moves. Indexes are moving, currencies are moving, commodities are moving. So everybody plan your trades, trade your plan, use appropriate risk management, and get after it today. Take care, guys. I'll see you in the trade room. Trade room.